Ever scroll past a stock drop and think, what does the market know that I don't? At Insightful Value, we flip that question around. What does the market not know? Lennar's stock is down, but when you dive into the numbers, the story gets a whole lot more interesting. This review is for informational and educational purposes only and does not constitute financial advice. So, what's the deal with Lennar? Lennar Corporation is one of the largest home builders in the United States, with operations across 26 states. They don't just build houses, they build entire communities. From affordable entry-level homes to high-end residences, Lennar has its hands on the pulse of American housing, and they've got the scale to back it up. So why is the stock under pressure? The housing market has been facing headwinds, rising mortgage rates, affordability concerns, and economic uncertainty. Naturally, investor sentiment takes a hit when people think fewer homes will be sold. But let's not forget, Lennar has weathered storms before. Their latest earnings report showed strong revenue performance, driven by solid home deliveries and effective cost management. In fact, Lennar has consistently posted margins that many competitors would envy. Gross margins recently sat around 21%, with net margins in the double digits. Very healthy for the sector. One thing that sets Lennar apart is their focus on efficiency. They've streamlined operations, pushed digital tools into the construction process, and vertically integrated where it makes sense. All of that translates to lower costs and better profitability, even in a cooling market. Another highlight? Lennar holds a significant amount of cash and has been actively buying back shares. That's a sign of confidence in their long-term strategy. They've also maintained a consistent dividend, rewarding shareholders even during cyclical downturns. Yes, housing demand may fluctuate, but the long-term fundamentals, population growth, aging housing stock, and supply shortages still support the industry. And Lennar, with its size and adaptability, is well positioned to capture that growth when the market rebounds. From a value perspective, Lennar is now trading at a discount compared to its historical averages and sector peers. Price to earnings and price to book ratios are both sitting at levels that suggest the market is pricing in a lot of pessimism. That's exactly the kind of setup we look for at Insightful Value. At Insightful Value, we specialize in uncovering underappreciated companies with strong fundamentals and long-term upside. We break down the numbers, cut through the noise, and help investors see the real story behind the stock price. Whether you're building your first portfolio or managing millions, our insights are designed to help you invest smarter. If this breakdown of Lennar piqued your interest, there's more where that came from. Visit insightfulvalue.com for full reports and analysis on undervalued companies you won't hear hyped up on social media. And don't forget to hit subscribe so you never miss a beat. Stay sharp, stay curious, and as always, do your own homework. See you at insightfulvalue.com.